Got some exciting data and news to share with you. Looking at the stock market last year in September, and I'm recording this in October, so we've had 12 clear months since September 2020. We launched, as we do each month, our approved list of stocks that we would like to hold for 12 months. And this is based on cash flow, performance, consistency of performance of those stocks, volatility, valuation, revenue growth, dividend yields. So as you can imagine, we tick every single box for every stock. And I'm going to share something with you on screen now. And what you can see there is the results from the 1st of September to in 2020 to the 1st of September this year. As I say, I'm speaking to you currently in October, and we'll do this each month to look at each 12 months worth of performance. And these are the performance figures, and you can see the percentages here. 19.6% for Abbott. Accenture was up 40%. Not everything went up. Akamai went down 4.7%. Anyway, I'll scroll through these. What I've displayed here are the US holdings, New York Stock Exchange or NASDAQ ones. There were some European ones, Swedish exchanges and UK ones, and I can do a separate video about those. Some did incredibly well, like Crocs, up 257% over that 12-month holding period. Why 12 months? Well, I explained that in the program. Generac, 127%. Others were down. If you didn't have a stop loss at all, you'd be down 48%, for instance, on Heritage. Now, remember, we used the same selection criteria for all of these stocks. So there's several important things I want to tell you. First of all, of course, we had a wonderful tailwind, which is why we got some of these great returns. The other thing is you might not have replicated this, even if you got the list last September, because you might not have picked all of these. Why would you pick so many stocks? And the ones you therefore picked, and we normally recommend about 15 to 20, you might ended up, out of bad luck, having picked Black Knight, Chemed, China Yuchai, and Congra Brands. Okay. Equally, you might have done rather well and picked Crocs and so on. And you might say, well, wait a minute, why couldn't you have just picked the big ones? Well, because there's a degree of magnification or prediction or forecasting, call it what you will, you can't get beyond with a crystal ball, okay? And we don't have a crystal ball. So whilst we would have loved to have known that it was Crocs alone, which would go up 250%, because guess what? I would have put everything just into that one. We didn't, which is why you have more than one stock. It's why Warren Buffett and Bill Gates all have more than just one stock alone. That being said, our job is to narrow down the probabilities so that you're more likely to get the 174s, 116s, the 97s, and less likely to get the Mercs, which again, it surprised me that they're down 9% over that period of time. And you can see over here, you were significantly up. You were beating pretty much every other long-only fund manager. You were beating the market, obviously. If you had put equal sums of money in each of these, you would have averaged over 40% over the 12 months. Okay, it doesn't mean you would have done it, because guess what? The other thing is, I guarantee you, if you were up 120 odd % in Generac, you probably would have taken some profits, because that's just human nature. So like I said, this doesn't mean you would have got exactly this return, because most people don't just behave like machines. If they do get large returns, then they take those profits. Equally, these are not recommendations for the next 12 months. I'll update the October list once October's finished, so we've got a good clear 12 months to that as well. Okay, but for now, just wanted to share. Very excited on these results. We're going to do this for every month since we launched the Great Investments Program. If you want to learn a bit more about investing and finance and all the rest of it, have a look at my campaignforamillion.com. Campaignforamillion.com. Lots of free education and information there to teach you on how to be better at picking stocks. Okay, for your pensions, for your SIPs, for your ISAs, your 401ks, your Roth IRAs, and so on. Okay, thank you very much.